Morning, Steve Freed in Chicago with the morning grain comments. Well, it's cold here in Chicago, and the good thing is that the forecast is we might warm up by the weekend, and we'll see after that what kind of temperatures we have across the Midwest. While we're talking about weather, South American weather is mostly favorable. Overnight, bean prices up a little bit, corn unchained, wheat down a little bit. Outside markets, you've got the dollar is a little bit lower, and most commodities are mixed a little bit higher. Some of the Chinese housing data was a little bit disappointing. We're also watching pretty closely crude oil. We've talked to OPEC might start lowering production versus the high supply of crude oil around. Certainly, lower gas prices here in the United States might help our economy. USDA estimated that corn harvest was about 89% done. The states that are lagging are Indiana, Michigan, Wisconsin, and Missouri. As far as soybean harvest is concerned, it's 94% done, and some of the key states are like maybe 1 or 3% behind normal. But we should get the remainder of the harvest done. Winter wheat crop is still rated 60% good to excellent. There was some decline in states like Kansas, Missouri, Illinois, Arkansas, and Nebraska. And while we're talking data, Brazil's soybean plantings are 62% done versus 74 average. The lagging is in the south, in Rio Grande do Sul and Paraná. We're still talking about yesterday's bean action, a quick rebound in prices after the USDA came out and said that weekly bean exports were record high, and the October NOPA crush was also record high. The one thing that was also noted was that the soybean oil yield for October was lower than expected. Still watching Russia, Ukraine pretty close. NATO chief warns about Russian troop buildup along the borders. We'll be watching that also pretty closely. Yesterday we had a webinar. Hope everybody watched it. Hightower did a really good group of pointing out key factors for the grains. They basically, like everybody else, is bearish beans. But also down the road, they're kind of friendly to the corn market. If next year's acres are lower, and also if the yield is also trend yield or lower. They would suggest selling 2 March corn puts and buying a March soybean put. They also talk about selling a March soybean call and buying maybe 3 March corn calls. In the other markets, they're looking to buy some Feb hog puts. They're also like a March coffee bull call spread, and they also suggest buying March sugar. So in general, we're still kind of working around all this record demand on the beans. We'll be watching December meal and what kind of deliveries are there with cash values over delivery in the east, and looking for maybe more sideways broad trade in the corn and wheat. As always, these are my thoughts, not those of ADM or ADM Investor Services, and have a safe and profitable trading day.